In this video, we are going to be analysing Palantir, ticker PLTR. If you want your own stock analysed, throw that in the comments. We'll get around to it when we can. Now, what you can see is we've currently just broken above this $13 level. We're up about 10% on the day. Now, this is something I was waiting for, and I'll go through my actual trade plan as well as doing analysis because I am now looking to trade Palantir. So, what we can see is obviously where are we from a standard deviation channel perspective. This is how we always do our technical analysis, and what we can see is we are extremely overbought. So obviously we had earnings, we got a good pop, and then we kind of just continued this upward momentum. Now what we can see, 11.45 to around 11.25, this is our third deviation. Now, whether we're looking at small, large caps doesn't make a difference. What these third deviation means is, really, if you break above it, you are extremely overbought. 99.7% of the data should trade at, kind of within this range. And the reason for that is, again, if you just understand standard deviation probabilities, you have 68% of data trading within the first, you have about 95 trading within the second, and the third should be 99.7. Now obviously it's trading, nothing is guaranteed, so the probability is more increased when you're at these levels that you get a reversal, but again, nothing is ever guaranteed. But I am now looking to play it because we are above this level. We are extremely overbought. What we can see is we've tested the fourth deviation, we hit this, we did pull back, we retested this level as a support, we're starting to break out. Now this is why I didn't take this short at $13, because I am looking at it short bias because we are extremely overbought. But what I am then waiting to do, and you can see we don't normally have this line on our charts, this is the fifth deviation. Again, we only really pay attention to the first three, but if we have broken that resistance and we want to catch it short bias, we need to look for that next level of resistance, which I would normally be looking at, just that next deviation, which in this case is going to be between that $13.40 to around $13.50, because again, that is our fifth now deviation. So what I'm paying attention to is our break high. Again, we've broken it up now to a high of 13.13. I'm waiting for it to go that bit higher, and then really once we get to around $13.50, this is where I'm looking to take this short bias. Now, how am I looking to take it short bias? Because again, we always want defined risk. If we're taking this short shares, obviously, if the stock's already gone from, since earnings has released around $9 to 13, it could continue another 3, 5, 10 points. And again, so we want to be protective. There's no point being in denial that you're going to be right 100% of the time, because you can't be. So what we can do is look at Palantir. We can look at some options. So now what we can look at is, on here we have short 100 shares, buy one call. So what we do by buying a call is we define our risk, because even if it flies up to say $100 a share, the call will offset all of the shorting of the shares risk. So what we can look at now is, if we change this to $13.50 per share, that's what we're looking to short it at. We can see roughly what are the $13.50 premiums sitting at. They're currently sitting around $36. When we're at $13, the premiums were about $50.55. So what we can do is go over to the analyze page. We can put in the 13.50s and say there'll be 60, which again would be a bit more on the expensive side. But again, then this will be most likely worst case scenario. And what we can see is then we're getting in at 13.50. So this would be the price. Even if it continue to go all the way against us, whether it goes up $1, whether it stays flat or goes up $100, it's not going to make any difference to our max risk. Our max risk is now defined at $60 per 100 shares that we trade. So that's our max risk. And now where we can make the money is obviously if we start to trade back, kind of pull back as we would expect, because it's extremely overbought. And if we fall down to $12.50, we're going to be up about $40. If we fall down to $12, we're going to be up around $90. Again, this is only one contract and 100 shares, so not a massive position. But what you can see is from our standard deviation channels, what would kind of take us back to a reasonable level. So 11.50, this is where we kind of expect it to trade back below. But again, this is still extremely overbought. We wouldn't be unlikely to see us push further below kind of to that 10.50 and even that 9.50 on the way down. So really my absolute kind of minimum target would be this one at 11.50. This is where I'll take in a tiny bit of profits, but really I am looking to hold it that bit further down. So we can see if we're risking $60, our target is 11.50 to where we start locking in profits. We can see that is, you know, about a 1 to 2, maybe a tiny bit more, about a 1 to 2.2. Because we can see at $11.50 we would be up $140 per 100 shares we're shorting. Obviously, you may have to trade this a bit differently because these calls expire on the 26th of May, so they expire on the Friday. If you want to give the trade a bit more time to play out, obviously we can look further out. We can go 10 days out, 17 days, 24, 31. Again, the further you go out, the more expensive that risk protection is always going to cost you. So those calls are going to be more expensive. We can see, you know, it'll cost about $25 more to get an extra week on that play. But really, to something like this, I would probably take that. I'd probably be looking at around like 10 to probably 25. We can see the 25s are still not crazy expensive. They're about double the price of the 3 days out. So, you know, it's always going to be pick and choose, see what your risk to reward is. But even if we go out 25 days, we're getting a 1-to-1 risk to reward. And at least from how I trade and read stocks, the probability is much greater than a 1-to-1 that we trade below this, then we stay above this coming out a month. So to me, even if it's a 1-to-1 risk to reward, that is a great trading opportunity for me to catch that short bias. And again, it's not a hard to borrow stock, so we're not really going to be paying any short locates or any short margin fees. So we don't also really have to account for those. Again, that's going to just be our first target, a 1-to-1 for our first target. As we go down 10.50, you know, probably getting about 3-to-1, and if we go down to that 9.50, we're probably looking at a 4 or 5-to-1 risk to reward. So again, great opportunity on this stock. That is the key opportunity I'm paying attention to. Again, anywhere above this 11.50, we're extremely overbought. I don't really have targets because I wouldn't be looking to trade at long bias past this level. But if you do want kind of resistance to be paying attention to, obviously 11.50, we've already hit that, so that's now a support. We got this 13.40 to 13.50. Again, this is where I'm going to start taking it short bias. So again, that is a bit of a disclaimer. I am going to be trading this myself, coming into that 13.50. And if we went higher than that, the only way we can really look to grab some levels is to go on a longer term time frame where our resistance is. So we have one around $15. We have another one around $17.20. So again, you just zoom out, go into about a 5-year chart. You can start seeing where the further up resistance is. But overall, 13.50 is a key level I'm paying attention to. And actually what we can see zooming out, going on to, as you can see, a 5-year chart, that is also actually our first deviation. $13.30 is on the high end, becoming a bit overbought also from a 5-year time frame. So just adding strength to that level. But overall, that is the main breakdown I'm seeing on Palantir. If you enjoyed the video, why not drop a like and subscribe? Let me know if you're trading it, whether that is short or long bias. And why don't you check out this analysis video.